Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to talk about uranium. We're going to look at some different charts. I don't have the watermarks or the labels of some of these companies, but I want to show you kind of the confluence of evidence that's in the market that we could be entering a very big up leg in uranium. So we're going to start with some of we'll call it the ETFs, and then we'll look at some of the individual companies. I'm not going to name the companies, but we'll just look at the individual companies to show you the data that I'm looking at and the confluence of information. The way that I view these markets is I look at information across a whole bunch of different things. Then it basically paints a picture, and I'm going to paint that picture for you. We're going to go through a bunch of things, and I'll paint the picture for you. And the reason I'm doing this is I want to make sure that the viewers have an opportunity to look at maybe perhaps some of the companies before they really start to take off. And I'll try to explain why I think certain things, how the progress might go. And the progression might go. Camco breaks out. We've broken out in Camco. Um, we've got the ETFs that are breaking out. We've got the futures pricing in uranium. We've got the commodity index is breaking out. We have increasing interest rates. We have oil breaking to the upside. This is all painting a picture, guys. It's a bullish picture. And I know a lot of people say, oh, I wait for the breakout and I wait for all these things. Guys, I'm locked and loaded. I bought very good pricing. I don't, I cost average in. I have a strategy. The strategy is tailwinds behind us. And I look for a confluence of information. So I'll go through some of that information. We'll go through uranium. We'll go through maybe a couple stocks. We'll go through some fractals together. Fractals are taking other patterns and comparing. And I'll grab a few and I'll show you kind of what I'm seeing. A fractal is a pattern that repeats over time. Humans create these patterns, the herd does, and they generally repeat pretty commonly. It's not, they link up pretty well. They can be stretched out, they can be compressed, they can be elongated, they can be compressed downward too. So they're not a perfect thing. It's not like this is going to be a prediction tool, but it's somewhere to say, you know what, there's evidence that we are at this location. That's why I use it. And if you can have evidence where all the evidence suggests a big move, then, well, I mean, that's what the evidence suggests. Let's put the probabilities and statistics in our favor. And then, maybe that's where people can invest or they can look at certain sectors, and that's where you might gain better success in doing that. And so we use all the tools at our disposal to figure out what could potentially happen. So let's dive in here real quick, and I'm going to go over a lot of stuff. Probably some information that you see on the daily technical analysis updates, but we're going to look at it from a big picture view. I'll be making my comments as we go. So, and the watermarks are all removed here, so I can take basically anything and show you guys some information without releasing that info, the particular stock information, because I'm just trying to train here of what I do in my approach. So this is Uranium in the background, but let's look at the commodity sector real quick. So when we look at commodities, this is obviously, we look at the big picture view here. This is the big bull market in commodities. What you see is we have the ratio down here, turn at a very cheap level for commodities. That's what that ratio here is at the beginning of the bull market. So the ratio was cheap, and that's what the orange signal is. It says we should be in commodities. And then what it did is it came up, pulled back. That's your first leg, and this is your second wave. Then we had a large up move. This is your third leg or wave. Here's your fourth. And then you had your last blow off, fifth. And that's your Elliott wave movement in commodities. We had a I call it the three hump pullback. So that's one hump, two hump, three hump. We had a capitulation bottom, and then we had a very low low in the commodity to stock ratio here. So we had a sell signal of commodities here and a buy signal here, and you can encapsulate this entire top. It was the entire top that was encapsulated there. We had another buy signal, and what do we have? I'm looking for this same type of movement of the wave. So what I'm going to do is I'm going to take a fractal, which is that fractal that I just pointed out there. What I'm going to do, oops, right here. I'm going to take this fractal here. So this is called a fractal. That's what this blue is. So I copied that last 1, 2, 3 fractal. Now this is crazy, guys, okay? Now, I'm going to put this over here and just lay it over there for right now. There's people who say that this here is a big old fractal of this. So this is actually, this entire wave here is wave 1, and that this here is the bottom of wave 2. So this is wave 1, this is the bottom of wave 2, and that a gigantic fractal is being created where wave 3 is going to come up and go all the way up to some ridiculous level. I would say I tend to believe that they are correct. So what I'm going to do is I'm going to take the fractal I took in the first wave and I'm going to overlay it on this next one. Now, if we're correct here, this is the first leg up or the first wave, and this is the second wave pullback, and we are potentially in wave 3 already. So what you can do, and this is not going to be a perfect overlay, okay? So what you can do is you can take this beginning fractal and draw it out like that. And you can see this one really fell during that time frame because we had a large recession. So let me go, I'm going to go back into that. So this is a recession here. This move that we had here was a recession, and it drawed us down a little bit further than what we normally would go. Now, is there potential that we could still see a recession? Maybe. It's hard to say. A recession in this type of environment, the interest rates are really low, and we didn't have a problem with inflation being created from the interest payments on the debt. Today, I think they're screwed either way they go, because if they're increasing the interest rates, and if the market doesn't really break because the housing market is strong, then I think that we are going to get inflation from the interest payments on the debt, even if they can slow down the housing market. And that's the reason they're doing that. Now, I overlaid this fractal. You can see the fractal, you can see the move here, and how it's very similar. This one fell down before it went up. It was basically a slingshot pattern. This one's breaking to the upside already. Are we going to get this move lower? I don't know, guys. I don't want to try to predict the short-term market movements, but this is, in my opinion, wave 1 here, and this is a big move. This is a very big wave 1 move. This is wave 2 that I think we've completed, and we could be starting wave 3 already with the breakout that we've got. If it were to move, and I took this fractal and moved it to the same size as this first wave, what commodities would do then is go to a level like 1158 on a wave 3 break. This entire leg, it'd be wave 1, wave 2, wave 3. We would get a pullback, wave 4, and then you get one last move up for wave 5. So that's kind of what I think the whole big picture view would look like. 1, 2, 3, 4, 5 on an Elliott wave count. What does that mean? It means that commodities could do a 4 or 5x here, like a 4x to get to this level. 4x the entire commodity area. And I'm not saying that's not my prediction. I'm just saying that it's a possibility. I'm not like an end-all, be-all Elliott wave expert, but that's kind of the way that I kind of view it. And that's a fractal there. So we're starting to see positive movements in crude oil. Crude oil is kind of squeezed up and is breaking to the upside. If we back out and we do that same type of analysis, we have the same type of thing that's going on. Remember, the bull market started roughly where this is at. What I'm going to do is take that off. So the bull market started here. So wave one, wave two pullback, wave three, wave four pullback, and then wave five was a big extended fifth wave. We went into a big consolidation period. You could say this entire thing is wave one, the pullback's wave two, and that we are going to go into some bigger pullback. That's what some people think. Do I think that? I don't really know. But I don't think it really matters, because if we move up in three waves, and this is wave one, this is wave two, and hopefully that's the bottom of wave two there, then we're already on our way starting for wave three. So oil has already broken out. That is our inflation sensitive asset, and oil also is a leader and moved up quicker than uranium did. And we also saw an overlap here of O2. We could yank up. This is CCJ, just to kind of put it in a new pane. Camco. We can see that if we kind of link up where we are on this vertical line here, you can see that oil is basically front running uranium to some degree. So you can see uranium didn't do much here in the 99. Oil took off and then had a pullback. Uranium didn't do as much. Then during partway of the move up of oil, we went up in Camco, pulled back during that recession, and then we took off in '02. Oil was already moving up, if you can see here. The bottom of uranium's here, and oil started to move up. Wave three started with oil first, and uranium went second. So what do we have here? Well, Camco is incredibly strong, guys. We never really had a large pullback in Camco. You can see that we went up. Oil blasted off. Uranium started to blast off. We all kind of went together. And the pullback in oil didn't really impact uranium that much, or Camco. I mean, we had some pullbacks. This is where all the retail investors, oh, I thought we were going to the moon. Oh, I'm down on my portfolio. And then they get all negative Nancy and whatever. Stay long, guys. Stay long. And we got our pullback. We're coming up in oil, and same with your Camco. Camco is coming on up. We've broken out a lot of the patterns there, and we can take a look at Camco real quick. So here's Camco. This is Camco. So there's your first move up, your pullback of the recession, and then the big third leg move. It went sideways, and this is your fifth leg move. So I think where we're at, looking at where oil is at, and we can gauge the confluence of information that we have. We have the big move up. It consolidated some and is starting to make, hopefully, what is the third leg, which is this move coming here. Yes, it looks different. Yes, it looks a little bit more jammed up. And hopefully that is where we're at. I mean, it's a lot different looking chart than what we were beforehand. But hopefully we can get a big break here and we can start moving. And it's another inflationary wave. We can also see that interest rates continue higher. When interest rates continue higher, and we can go to interest rates here real quick. So interest rates, the 10-year continues to move up. The thing that is very interesting here is that this was a very big bull market in the 60s, 70s here. That 70s bull market is big, huge commodity bull market with a rising interest rate environment. The last bull market was not as big. It started in 1999, which it started here. And you could see we were in a declining interest rate environment for the most of it. And you can see rates peaked there in 2007. So the rates here look like this. You didn't get a very large money rotation during that time frame. It rotated, but it was not nearly the same size as the rotation here. What I think is coming is we've broken that downtrend line, and we're starting to break higher with rates. I think this is going to be an amplified move where rates continue higher. I think that's going to be the case. It sure looks like it to me. And we could see even a larger sum of money rotate out of stocks and bonds and into our commodities. So that this is all just data that's accumulating for a bull market in commodities. So if we were to go to say, URA, and what we look at URA, we can, take a big picture view here. What we generally see is a big bear market. That's your bear market where it's coming all the way down. Then what you want to see is a basing pattern. So if we zoom in here, you can kind of see a little bit, maybe this is a double bottom, maybe it's kind of a wedge type formation. It doesn't really matter. It definitely ended here. You had a nice big bullish engulfing in April of 2020. That's when you should have really woken up to this move, and then October 2020 would have been a good one. You have wave 1, wave 3, and then wave 5. And then you have your consolidation here that we consolidated. This here is wave 1, this here is wave 2. And generally, the size of that wave will determine the size of wave 3. That is a fractal. So if I were to, I'm just going to grab another fractal from a different sector to show you guys how crazy this is. So I'm grabbing this fractal here. This is a bull market. I'm going to grab that fractal from here to here. And this is what I grabbed just to show you guys. I'm going to go back to URA. So here's URA, and I'm going to paste that fractal over it. All right. So let's just zoom in, and I'll kind of show you guys the fractal that was created. Now, that's the fractal there. You can see it. I'm just going to show you. It's not going to be perfect. And this one had a blow off top. So that's the fractal there. You can see how it comes up. This one came up. We didn't have a blow off top like that other company had. And then we went into a consolidation. So that is the wave 1, wave 2, or wave 1, wave 2, wave 3, wave 4, wave 5. And that's what it looks like if you were to compare it and I were to match it up. Now, what I'm going to do is, in my opinion, because we looked at all that other information, I think that this is wave 1, this entire thing, and this is wave 2. So what I'm going to do is I'm going to take that other fractal, and I know that this goes a little high because it's a little bit, it had a blow off top. So I'm going to grab this, and what I'm going to do is I'm going to extend it out. So we're going to have to back out here. And what I think is going to happen is that we're going to get a move that is similar to something. Let me get this here. So see how this aligns, and then we consolidated. It's basically the same fractal here that I'm aligning. And guys, I didn't practice this fractal. I'm just putting it and doing it right in front of you. So that is the fractal that is created. A lot of people, they are talking about a head and shoulders top. So we heard some technical chartists say, this is a topping pattern. So this lead-in pattern that we've got, they were saying that this is going to be, and I'm going to zoom in here real quick, guys, that this is a shoulder, a head, and that this is a complex shoulder, and that this is going to break to the downside. We see this lead-in pattern, which is the same pattern as like everything in commodities has right now. They all have it. Shipping has it. Uranium has it. Oil and nat gas companies have it. Copper companies have it. I see it in lithium. Some of the lithium companies possess it, depending on what they have. But notice this movement. Look at how similar this movement is. If I were to grab this, guys, look at this. Like, look at that movement there. So just to show you, like, this is the right shoulder, the top, the right. This movement that it comes down like this is exactly the same. And you know what happened after this? You know what happened after all those movements and all that? It's the same herd. Remember, the same people are trading this stuff. Look what happened next. Look at that. That's when we launch. That is when we launch. Now, am I telling you that this is 100% in the bag? No, it's not 100% in the bag. But what I'm telling you is I've studied this stuff inside out. The fractals are in alignment. And right now is the time that it goes into, quote, the fly zone. where it's going to fly up here. And maybe I can even make this bigger, the fly zone, guys. Now, this is an overextended top, so maybe we can also throw Fibonacci extensions and stuff on this. A Fibonacci extension, if I were to throw that on there. This one had a blow-off top that exceeded everything. A lot of the times, the third wave could move, somewhere in this region here, $100. Maybe the entire URA sector goes up 4 or 5x or something like that in this next bull market move. But what really took off during that time frame were these small little lagging, small little guys. And if I were to like pull one of them up to show you guys, and I want to release the name for the respect to people that are members and stuff. And members, a lot of these companies, so we own them and stuff. This is a falling wedge, and notice the fractal that is created here. And we've broken to the upside, and we're just sitting there waiting. Watch this, guys. Watch this. You're going to like this. Hopefully you like this. Hopefully you like it. So we were to, shrink this up a lot, put it over here in the corner, and I'm going to yank this fractal over, okay? This is of a different company in a different sector, this fractal I grabbed, okay? And remember, this has a blow-off top in it. But there's the fractal, all right? So when we look at this, we're looking at the pattern and what it creates. I call this the lead-in pattern. Scott and I we did a bunch of analysis on this. We saw it in Apple. We saw this exact same lead-in pattern and everything in a bunch of different companies in different sectors during different even time frames. The herd, which is all of us collectively, trades stocks and creates this pattern. And what this is telling us is that we are early in this bull market. And I'm sure if you listen to me and you've been on the YouTube channel, you probably already understand that. So for this particular company, we're trading at $2.06, somewhere in that range, lower $2 range. This move, I think, could easily go to $20. That would be a 10x. So, and that is not, that's like a fair projection. You could even do a fib extension here, and you still get around that $20, $18 extension, which very well could be where the top of wave 3 goes. Wave 3, not wave 5, wave 3. So we could get a 10 bagger on the next wave, and then the fifth wave would come after. This here is the third wave. It consolidates here at 13, and then this is fifth wave there. Depending on this can obviously be larger. It can be compressed, but it looks like to me, if you were to overlay it the way I have it, maybe this peaks out in 2028, and that's where I have a lot of my data saying, late 2020s it could peak out. And the third wave could maybe end in 2026. I don't know. Again, we're just overlaying to see the similarities here. So, but we're seeing these setups in these companies that are right at this corner here. And it looks like a very, very good entry point. And it's not the only company that I'm seeing that has good entry points. I can pull up another one too. We have another company here that's also squeezing up on the right-hand side. And it looks absolutely fantastic. So that's kind of the data that I look at, guys. And we're looking at all these patterns. We've got the fractals that are in alignment. I know there's other people looking at this and they're saying, they're drawing their lines on their charts. And they're like, oh, I'm looking for this to fall. I think they are completely wrong. I use the fractals of previous bull markets, overlay it, see how things align. We've got falling wedges that are breaking to the upside. We've got energy, oil in particular is what I'm talking about, oil breaking to the upside. We are seeing bottoming patterns across everything. It's in oil, it's in nat gas, it's in energy service, it's in uranium, it's in everything. So we've got that full alignment that we want to see. This is not being driven by supply and demand of the individual sectors. This is being driven by greater forces that are larger than the commodity market. Um, it is being driven by interest rates and credit expansion and money that was already in the system. And what happens under those market conditions, and I'm going to try to describe what I think is going to happen. This is my opinion, and I may not be right, but here's my opinion. I think the herd is that all humans trading with each other. There's losses that are being incurred in the bond market. Let's go over that. So, the losses in the bond market are here, and this is the bond prices. This is TLT. You can see that we've come down. We've broken the trend line, and we're coming back down. And those are losses in bonds. People are selling bonds, and we're also releasing a lot more bonds, and we have to roll over a copious amount more bonds. It's about 50% of the debt will be rolled over the next few years. So interest rates, I think, will remain elevated or increase. And when people get losses in their account, they're more inclined to sell and rotate that money into something else. So the market conditions are causing this rotation of money. So they're not happy. They're losing their money and they want to sell and buy something else. That's the rotation of money that I'm talking about. Interest rates are causing that rotation. Well, part of it. Inflation causes the rotation of money out of bonds, and then interest rates go up, which causes the rotation of money out of other investments. So that's the sequence of events. Inflation, people sell bonds because they have a real negative rate. That raises interest rates, and then interest rates going up also causes further selling. And we should see further selling in the overall stock market and the NASDAQ market. NASDAQ is the most sensitive to these market swings because of the growth that they have out in the future. When they discount those growth rates back, they use a net present value calculation, which uses the interest rate on the 10-year yield. When the 10-year yield goes up, it's going to compress the valuations of those companies down. They haven't moved downward that much yet. If interest rates remain elevated, I think there's going to be money that rotates out of those stocks. And when uranium and a lot of these other sectors start to go up, that's where the money's going to go. It's going to chase. And it's in everybody, like almost genetically, guys. You can't stop this like genetic response. It's like moving. It's very difficult for a lot of people. If you were to yank a stock down in front of somebody, they're going to panic, and then they're going to want to sell. But that's the exact time that you want to buy. And there's companies that are down right now that people I think are panicking in that you could get maybe decent entry points. But that's the data. That's the information there. We have interest rates breaking to the upside. We've got bond prices that are falling, which are all interconnected and correlated. And that's going to be the rotation that causes it. And if you look at ratios, the ratios of these things are all just ridiculous, and that's more evidence. So let's look at a ratio real quick. Give you guys some more information. So this is a big picture view of ratios. So when we look at this was a underperformance of commodities to stocks as this declines. This is the CRB index in relationship to the S&P 500. So commodities underperformed. We got a bottoming in the ratio of March of 2020, and then we started to bottom out here. And then we broke in 2021. This is your first wave, probably your second wave here, and then you're going to get a big third wave that comes. What does that mean? I think what's going to happen is commodities are going to outperform. They're going to go up, and stocks are going to go sideways or down. I don't know which one it's going to be, but commodities will vastly outperform stocks, vastly. And that's the money rotating between sectors. And you can obviously see that we've broken this downtrend, and it's a new paradigm where commodities will outperform. And then we'll hopefully get wave 3 here. And if we were to look and do, I don't know, this is on a ratio, but we'll see here. Wave 3 could easily go somewhere like in here, which puts us in this like congestion zone. So like this congestion zone is probably somewhere where we'll end up in that general vicinity. So we'll probably make our way up all the way and then we'll get congested up there. And then we'll have one last push in a wave 5 eventually to the upside. So that's your further evidence. And you can tell if we zoom in that we've broken this downward kind of channel there, or I should say falling wedge, and moving on up in the ratio itself. So hopefully that's already began, you know, hopefully it's already begun and we're already on our way to making commodity moves. So that's a lot of the information. And there's a lot of companies right now that are really good buys. Some have already taken off and people feel like they're chasing. I think we are very early in this mix and you're not really chasing too much if you're buying down. Even companies that have gone up 30-40% off their lows, I don't think you're chasing that bad. But obviously there's excellent entry points across the board. Depends how much risk you want to take. Would now be a good time to take on risk? That's dependent on you guys. All I'm going to say is if I were to take on risk, if I were to take on extra risk, I would do it now. That's what I would do. I would be looking at the companies, how I would allocate. And I know some people, they want to throw on a bunch of risk, and that's up to you. It may or may not work out, but I think now is a good time to be looking to take on risk if it's like a uranium company or something, because we're low still. And we've broken out of those falling wedges. And I don't see any evidence. I'm just showing you guys all the evidence that it all looks good. It all jives with falling wedges and breaking to the upside of energy and oil and commodity to stock ratio, commodities breaking out of its wedge, and et cetera, et cetera, et cetera, whatever I showed you here. So I think of the sectors, energy, oil, energy in general, oil, nat gas, energy service, and uranium, they all look fantastic. And now's the time to be, I think, looking and trying to figure out what you want to do, how you want to allocate, what your strategies are, and the companies that you want to do it with. But that's me. Could this move be stopped or delayed? I mean, it's possible. They're going to have to, I mean, rates have got to move up dramatically to slow this thing down. But I don't know if it will, because rates moving up just means more money's rotating. All right, guys, that's what I've got for today. Thumb up for the content. Subscribe to the channel. If you'd like to subscribe to the website. It's in the description link below. We do have a discount, 50% off. And we do have a platinum question and answer session on Sunday, 5 p.m. Mountain Standard Time. I'll be going over what I think are some really good companies, individual companies, if you want to play that market. I usually tell you guys if it's a speculative company or if it's cash flow, generally speaking, the risk is lower with the cash flow cows, as I call it. And then the risk goes way up with the speculative stuff. Sometimes these speculative things, they move all over the place, guys. They are very volatile. You're going to have a pretty good stomach to try to ride through the volatility. Some people are meant for it. Some other people are not. I am not a short-term trader. I'm looking at this bull market from the big picture view like we did today. And I'm looking at it for the next, 2028, 2026, something on the lines of that. We still have a couple, 3, 4, 5 more years out of this bull market, and hopefully we get the big moves coming up, hopefully very soon. If not, that's okay. It gives us time to accumulate a little bit more before the bull market does accelerate to the upside. All right, guys, that's all I've got for today. Hopefully you enjoyed the clip, and we'll catch you guys later. This is Finding Value.